2 Canadian dividend stocks that you have to be aware about for 2023. As always, check out the Investing Academy down below if you're looking for courses and training in the stock market. Let's get started with number 1. It is the company Alimentation Couche-Tard, ticker ATD.TO. The dividend on this guy is small, but just wait till we talk about it. 0.76%. You'll see why this makes my list. Today trading for $61.87. This is a stock that, in my opinion, is as close as you're gonna get to a recession-proof stock. I've shared this exact chart in a previous video where it goes over their sales growth during the past 2 recessions. And whenever you come across a chart like this, you always have to take it with a grain of salt. If it's on a company's investor report, their investor relations, they're always gonna talk very highly of themselves. They're never gonna put anything really negative. Well, what's fascinating to me is that this has very much remained true. In fact, in our most recent recession or recent drawdown during COVID, they continued to grow. So they have proven the case that this company continues to grow. This is their actual share performance on a 1-year number. Very few stocks you'll come across right now are up. We all know the indices, whether that be the TSX down about 6 or 7%, maybe 5 now after the markets have gone up a bit today, but the S&P we know is down in that 15 to 20% range. This has been a stellar performer. On a longer term basis over the past 10 years, ATD has kicked the butt of both of these indexes. Based on the recent share performance, I think it is fair to consider this a recession-proof stock. And that makes sense. I saw a comment out there from someone saying that at the end of the day, people are going to shop at convenience stores. They're going to go to the corner store. They're going to buy snacks. This makes a ton of sense because this company boasts about 50% of their profits from merchandise sales. Obviously, fuel being another big important part. This is a very fascinating statistic. 65% of transactions are convenience store only. So sometimes people will go in to, get some gas and grab gas and snacks or gas and cigarettes or whatever the case is. 65% coming from convenience store only. This is obviously a high emphasis for this company. I would even argue, and you guys can let me know down below if this is true, I would argue that convenience stores actually see more transactions and more traction during a recessionary time. I think back to when I was much younger, I used to always eat at 7-Eleven. Different company, different store. But I used to go get their hot dogs and their taquitos. And when money was a little bit tighter for me back in the day, growing up, I find myself eating there so much. Maybe that's the case. Maybe that's what we're seeing in this tougher economic time. In more recent news, this was announced just 3 weeks ago. They acquired a car wash business known as True Blue Car Wash. Now they operate under a couple of brands, one of them being Clean Freak. I believe this is out in Arizona, so we're not going to see this too much here in Canada. But they added 65 drive-in tunnel-style car washes to complement their already 2,500 current locations. The True Blue business that's being acquired here already boasts 170,000 paying subscribers with their Fast Pass subscription metric. This is all going to be coming under the Couche-Tard brand and business. This is just deepening that play on their gas station automobile side of the business. You guys know from previous videos where we've already talked about their EV charging network, which is already being rolled out over on the East Coast. So adding electric vehicle charging to their various stations, a fun way to play the EV market. This company is heading in all of the right directions in my opinion, and I like it. Now let's look at the dividend because that is what we are looking to talk about in this video. It is small, but it is growing. It sits at 0.76%. They announced a 27% increase to the dividend just a few months ago back in November, bringing it to 14 cents per share. They boast a tremendous 5 and 10 year track record when it comes to compounding these right in that same ballpark. And what I love about Couche-Tard is the payout ratio sitting still less than 12% of earnings. What this indicates is they're paying out such a fraction of their earnings, they have a lot of room to grow. And of course, they've been increasing this for many, many years. This is a stock that as of current trades for $61.87, really trading at all-time highs. It's one that I would absolutely throw on the watch list. It's a happy hold for me in my portfolio. That is Alimentation Couche-Tard. In contrast to that, our second stock for today is not trading at all-time highs. In fact, this is a stock that's dropped down into my buy territory. We'll talk about that in a second. I literally added more shares of it today. So prior to filming this video, I added shares about a month ago as well. Remember, you can follow me on Blossom to keep up with this stuff for completely free. There's a link down below. It is the company Fortis, ticker FTS.TO. 4.10% dividend as of filming this video. This to me is a no-brainer for dividend investors in Canada. Up on the screen, what you're looking at is a company that boasts 49 years of consecutive dividend increases. They are set to become a dividend king, which is 50 years of consecutive dividend increases later this year. I believe that's one of only 2 companies Canadian utilities boasting the other dividend king status. This is the second largest REIT in Canada, and what I love about this chart that I'm showing you on the screen is that they are expected to continue growing this dividend at 4 to 6% through 2027. And in their most recent earnings call, they absolutely confirmed this. They are still on pace to hit that target. You know, what happens when you have these higher dividend yields up in the 4-5%, you often trade off the growth for the high yield today. You guys know we've done a million videos on that. Well, Fortis is a company that has the combination of both, a tremendous starting yield and one that is increasing year after year after year. For those that think this stock doesn't grow enough, which is something you'll always hear about Fortis, what you're looking at is a 20-year total return. Total return meaning growth of the share price as well as dividends received. The money that you receive in dividends would count towards the total return as well. This is FTS versus the TSX index. I'm using a proxy XIC, which is an iShares S&P fund. When you compare Fortis up against the broader market, you are winning when looking at total return. And I have this rule of thumb on the next slide where basically as the share price drops and correspondingly the yield increases, I've put a little range here. Whenever I see a stock like Fortis offering a 4% or higher yield, which again, currently it is, you see that pretty much aligned every time with where the stock drops, that is just an opportunity for me to load up the truck. It's in my zone. I will just buy. And like I said, I've basically been doing that. I added literally this morning and I added some a month ago. I very much like buying this stock when it offers. You can't do this for every stock, but a very reliable company like Fortis, you absolutely can, in my opinion. Obviously, do your own research. They pay 56 cents per quarter, which is annually about $2.26. Some may see this high payout ratio, 80%, and that may be a concern. Not for this type of business, right? Every company has their own different payout ratio ranges. Some tend to pay out more, some tend to pay out less. This business is literally in the business of collecting money and just spitting out cash flow for their investors. The dividend is such a high priority for shareholders of Fortis, and the 80% payout ratio is not a concern to me in the slightest. Like I said, I love this stock as a buy right now, trading for $55.16. These are two stocks that, for a dividend investor in Canada, you just have to have on your watch list. Two different stocks, one small and growing dividend, one already awesome one. But I'd love to hear what you guys think about those two selections for you guys. If you enjoyed, give this video a thumbs up. Make sure you are subscribed. As always, of course, check out the Investing Academy if you want to learn more about the stock market. That is that first link down in the description below. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.